What's going on, guys? Today we're going to talk about Starbucks and how much owning 100 shares of Starbucks will pay you in dividends. So if you're a shareholder of Starbucks already, congratulations on Friday. It was flat, flat pretty much all day. And then all of a sudden at 2:35, it shot up, ended up being up over almost 7% on the day, $5.11 there. So congratulations, you guys. But it has been, it's been a struggle, right? The past month you're down 1.31%. Over 3 months you're down 10%. Year to date you're down 17%. So it has been a struggle for Starbucks year to date. Whether that's because inflation is so high, the cost of goods, whatever else. Past year you're down 22%. Past 5 years you're actually down you're down 12%, down almost $11 on Starbucks. Looks like it peaked out in July of 21 around 126, 125.97. But yeah, it's been a grind. But for some reason Friday it shot up almost 7%. Not sure if there's any data in here as far as maybe a big hedge fund took a big position. Yeah, not exactly sure, but looks like it could be turning around. Up $79 a share. It'd be cool to see if it gets to 100 before the end of the year. Has a ways to go, right? It's down, still down 17.23%. It started out back in January 2nd around $95.45. So that'd be cool. I'd love to see it back above 100. But we'll see. Has a ways to go. That's for sure. $79. But let's look into, particularly the dividend yield, right? So 2.83%. So that's pretty high. And the cool thing about Starbucks is that I believe their dividend growth is pretty solid. We're going to take a look at that real quickly here. But yeah, let's go ahead and look into it. So I'm going to pull this website we talked about in my last video, Dividend. It's a really cool dividend website, provides a lot of dividend data. I do think they have a bug on their site though, because it's not 0.03%. It's actually almost 3%, but that looks like it might just be a bug on their site there. But let's look at, so this is the dividends, right? So the last dividend they paid as of July 20th was 57 cents. So that's actually today. The forward dividend yield for Starbucks is 2.88%. Average dividend growth rate for Starbucks Corporation for the past 3 years is 8.37%. So that's, like I was talking about, that is the really cool thing about Starbucks. They have been making a conscious effort to, try to continually increase that dividend year after year. So 25 cents, 30 cents, 36 cents, 41 cents, 45 cents, 49 cents, 53 cents, and we're up to 57 cents now. Payout ratio is 62.81%. So do with that information, as you'd like. If you think that's high, just keep an eye on that. $2.28 per share, and they're earning $3.63 per share. PE of 20, volume 6.8 million. They pay once a quarter, and they've been paying for 15 years, so that's really cool. You look at a longer time horizon, their dividend growth rate is actually a little bit higher, 9.25% on the 5-year and 16.53% on the 10-year. Ex-dividend date happened in May, but it looks like the next one's going to happen next month, so keep an eye out on that. If you purchase the shares before August, looks like August 10th of last year, but it might be a little bit different this year, so just keep an eye on that. But looks like they go on ex-dividend date in August, and they pay towards the end of August there. Cool. So with that being said, let's look at the data, right? So what we want to kind of see here, where is my calculator at? Here it is. I will drag it over. So they're paying, 57 cents per share, and it's currently $79.27. So if you wanted 100 shares, it's going to cost you, almost $8,000, sitting at $79.27. But for a dividend perspective, all you have to do is multiply this by 100, 0.57 times 100. You're going to get $57 a quarter. Divide that, per month, roughly $14 and a quarter per month. Annualized out, you're going to get, close to almost $200 a year. So not really high, but like I just mentioned in one of my previous one of my videos, the cool thing about owning 100 shares is that you have the option to do covered calls. And let's look at it right here. So this is options profit calculator. I plugged in SBUX, and let's just create a hypothetical example here. So we are July 20th. So let's go out to roughly August 23rd, roughly a month out. And it's currently at $79. Let's say we want to sell one for almost a percent. So let's just say we want to sell it, this sort of the bid, the ask. Yeah, so we'll sell the $90 strike. You're $11 out of the money. If we calculate here, so what this means is that you're capping your upside. So by selling the $90 call, you are agreeing to, sorry, Google out there. You are agreeing to sell your shares away at $90, right? So anything above 90, you're not going to make any money. It is capped. So we're getting roughly, $80 in premium. So our break even, not necessarily break even, our max gain is going to be $90. So it's going to be $90.80. So you're selling your shares away for almost $9,100, and you purchase them for $7,800, or yeah, you purchase them for $7,900 minus the credit received, so that lowers your cost basis. But yeah, so covered call is going to be a little bit more advanced. You just have to understand that, and just realize if you want to implement this strategy into your trading, that it's going to take a little bit of work. But max probability here, you make 15% on your money in a month, which that would be best case scenario. You're making $11.80. Max return $11.80, and that would be at if SBUX is above $90. So if it shoots to 100, you're gonna miss out on some gains there. Just keep that in mind. And then analyze out. I don't think this is quite a month, because if it was 15% a month, you'd be looking at 180. So this is not quite a month away. So maybe 3 weeks. But regardless, if you're able to make this per month and continually do it, that's going to be some pretty nice gains. Probability of profit of 53.3%. They based that upon the delta. I'm not sure what delta that was that we selected, but it was roughly $11 out of the money. So that's that. So yeah, I just kind of wanted to briefly talk about that. Yes, the dividends might not be that high, right? Like we had talked about, it wasn't that much for the dividends. But the cool thing about it is you're getting appreciation. Typically, if SBUX turns their portfolio around and starts making more money and become more profitable, long term, 5 years, they're still down. Long term, they're up, very, very high. But the cool thing about buying companies and stocks, not just for the dividend. Don't get me wrong, the dividend is great, but once you get 100 shares, that gives you the option to, no pun intended, sell options, right? And like we talked about, selling covered calls. So just some other ways to create some cash from your portfolio and your holdings. But yeah, guys, make sure you do your own research, right? Because the last thing you want to do is buy 100 shares of a stock, and the stock keeps depreciating, right? So if you purchased it back in January, $9,500, and it's been dropping ever since. So this strategy would not have been the greatest for that. If you're a long-term holder and you're not really worried about the price of SBUX now, then yeah, you don't care that you're down 17% year to date. You would have been able to sell covered calls, probably not close to your $95 strike, and get any premium for it, but you could have kind of just rode the wave down But yeah, so that's kind of the con of covered calls. You know, you're capping your upside, and then also you're taking on a lot of risk with an individual ticker, right? You know, you're risking $7,800, or back in January it would have been $9,500, and your investment's sitting at 7,820, or no, you know, $7,900 roughly. But yeah, lots to unpack there. Hopefully, I'm not rambling on too much. But I quickly wanted to, you know, kind of go through, you know, purchasing. The goal for me is to get to 100 shares, because then, you know, not only am I going to be making, you know, $57 a quarter in dividends, that is growing at an 8.37% dividend growth rate, you know, over time. I'm not going to have to do anything, and they're going to continue to keep up with inflation and continue to increase my dividend income over time. I'm also going to, you know, get appreciation from Starbucks if it ever turns around and, you know, starts performing better. And then also I can, you know, leverage the shares by selling and writing covered calls out of the money above my basis, and that. So there's a couple different ways you can make money with, you know, purchasing Starbucks, and that's kind of my plan, kind of my strategy. Hopefully you followed me there and I didn't ramble on too much. But if you guys have any questions, feel free to like, comment down below. Let me know your thoughts. Let me know if, you know, you purchase dividend stocks and you sell covered calls on them, because, you know, we're looking at a 2.8% dividend yield. But if you know, conservatively make an extra 1% a month, you're now yielding almost 15% on your investment. So just some things to think about and consider there. You know, obviously there's risk with selling covered calls, so make sure you understand that before you ever write a covered call. Do your own research. And yeah, guys, that's it for today's video. Hope you liked it. Please like and subscribe down below.